All right, hello everybody. I'm super excited to bring to you one of my favorite vendors, my local mortgage lender, Luke Hamlett from Supreme Lending. We're actually here in his office in Adriatica in McKinney. We're kind of central McKinney right now, aren't we, in Adriatica?
Yep.
Yep, so right in the heart of McKinney. Great area, fabulous businesses up here. But I wanted to bring Luke here today because there's so many questions that we both get from first-time home buyers that have a lot of misconceptions.
Oh, yeah.
And what they learn from online versus what they learn from a friend or another service industry may not be what helps them buy a home. So there's a lot of things we want to cover today. So we're going to jump straight into this and kind of go through some questions. And Luke's going to be our industry expert. But before we get started, tell us your background in mortgage so we know why you have the authority you have to kind of answer these questions.
Sure. So about 18, 19 years ago, I started flipping homes, kind of like what we see on HGTV, but the real way it works.
Right.
And then got into mortgage about 15 years ago.
Wonderful.
So fun time in the market back then.
Yes.
And so lived through it. I've held pretty much every job in this industry. So that kind of makes me an expert with the lending side as well as the processing and underwriting.
Wonderful. And how long have you been with Supreme?
My branch joined Supreme Lending in 2014.
Wonderful. So as quickly as you could be a part of it, you've been a part of it.
Absolutely.
And now you've got a great team here that helps you.
Oh, yeah. I have
Yes.
a very full, experienced team.
Yes, I love working with your team because we get so many questions answered. So wonderful. So let's kind of jump in. Right now we're in this part of the world where interest rates are really low. Inventory is really low. So buyers are going through multiple offer situations and they're getting discouraged. And before they even jump into the market, they realize maybe they're not actually able to buy. And some of those things that create their ability to buy would be how much money they have to put down on a house, their credit score, and their credit history as well. So I want to kind of dissect what that looks like. So the first thing I want to talk about is the credit scores. We just had some changes to the credit recently.
Oh, yeah.
Due to coronavirus and the market changing. And at one point you could go down to a minimum of what credit score?
580.
580. And that's considered, is that considered good or poor credit?
That's considered poor credit.
It's poor credit. So someone with poor credit could still get approved for a house, which was really great.
Correct.
Then they did what?
Then we had the pandemic and we jumped all the way up to a 680 and we've since been able to move all the way back down to a 620 now. So
Okay.
now our minimum score is a 620.
620. So that's currently right now in this market. This may change. Now that's pretty reminiscent of what happened in the past as well.
Absolutely.
This is not a new concept.
Very reminiscent to 2008 with the mortgage meltdown. So
Yes.
all of this was very familiar. Not in a good way, but it was familiar. We've seen it before.
So what does that mean for new home buyers who thought they were going to be in the market, who are not going to be? What's the next step they need to really take?
Well, in some cases, with the credit score changes, they might need to focus on their credit a little bit. There might be a few simple steps that they could take as far as paying down credit cards. Or maybe they need a little extra help.
And you've got a company you love to work with.
Absolutely.
Who's that company?
I do. That's Ace Credit Consulting.
Yes.
Worked with them for years. They're actually on the third floor.
Yay.
So we've got a good relationship, and it works well.
We'll have to do another interview with them. So now that process of getting your credit fixed, does that just happen overnight?
Oh no. In some cases, you can take maybe paying down a credit card, do a rescore, and you can get that score up within a matter of a week.
Okay.
If it's traditional, it's typically going to take anywhere between 3 and 6 months.
So 3 to 6 months. So for me, when I have my buyers come to me and they're ready to buy in the next 30 days and we find out their credit doesn't hit that 620 mark, we actually need 3 to 6 months. So it's really important to have a conversation with a lender and a realtor way ahead of your schedule.
Absolutely.
Don't wait till last minute because you may need to take some steps. So now what credit score? A lot of people say, well, I have what's the Karma app? What's the Credit Karma?
Credit Karma, freecreditreport.com,
All those.
CreditWise.
My score says
Yep.
I'm a 670 and I should be good. Is that the same score you guys use?
They are not. They are two completely different credit reports.
Okay.
So a lot of times when I hear online, I see 780, 800, that tells me you have pretty good credit.
Right.
When I hear the low 700s, I get a little scared.
Okay.
The big difference is what we see online only looks back a year at your derogatory items, so your late payments, your collections. Whereas on a mortgage credit report, we look back 7 to 10 years.
Wow.
So that's why you can have such a huge fluctuation in your score.
Okay. So how does someone find out that information, or how do you find out that information? They can't just do it right over the phone. You've got to do a couple of steps to get to that point.
Correct. We have to have a completed loan application to pull credit.
What does that mean, a completed loan application?
It means we need the personal information. We need your name, your address, your social, where you've worked and lived for the last 2 years, and that's pretty much it. There's a few other pieces of information, but that gets the ball rolling.
So to get started, it's very easy. A lot of people hear the credit application and they think, oh my gosh, it's going to take me 3 hours. I got to pull this all together. It's really kind of a 10, 15 minute conversation.
Absolutely.
So very easy to start. Now, the other misconception I think people have is that when they do the loan application, that it's going to really hurt their credit if they're not ready to buy just yet. Can you speak on that a little bit?
I can. I actually had this conversation a couple of weeks ago because things are always changing.
Yes.
So I checked with Ace Credit Consulting, and they said, I guess it's important for us first to explain, when you go to shop for a car, for instance, and someone pulls your credit, it's getting pulled multiple times and your score is going to drop.
Yes.
Mortgage gets treated differently.
Okay.
When we pull a credit report, it opens it up for 30 days.
Okay.
And anyone that's mortgage related can pull your score up to 30 days without you seeing that massive drop.
And that's because they want you to shop your rates.
Absolutely.
Yes.
Absolutely. That allows you to shop without drastically affecting your score.
Right. So if they've already gotten a credit pull from somebody and they want a second opinion from you, they can do that.
Absolutely. Absolutely. In a 30-day window, if one lender pulls your credit, you might see a 0 to a 1 point drop in score.
Okay.
If multiple lenders pull it over a 30-day period, you'll see a 3 to a 5 point drop.
Okay.
So still nothing.
Relatively, it's not going to really impact your category of credit that you're in.
Exactly.
Don't buy a car. Don't buy furniture. Don't pull out anything crazy.
Nope.
Don't do that yet.
Check with your lender first before you do anything.
Always. Always happens. We get 3 days before closing and I bought brand new furniture on credit from Nebraska Furniture Mart, and that will just derail sometimes we can save it, but it depends. So that's super helpful. So those are your kind of first steps. You got to get the pre-approval application done. And then from there, you can have an intelligent conversation about their options.
Absolutely.
Because nobody's treated the same. Everybody's got different backgrounds. They've got sometimes they have partners and spouses, and some both on the loan, some not to be both on the loan. What just happened? I don't know what's going to happen on these. Everybody's different situations.
Everyone is, yes.
So sometimes you might have student loans. Sometimes you may have poor credit in the past. Or maybe you had a foreclosure in the past.
Could have.
That stays on your record. So knowing all this is helping you plan your next couple of steps.
Absolutely.
So like we said, if you're 3 to 6 months out, this is a great time to get in touch with a lender and a realtor.
And honestly, if you have time to get started even earlier than that, I highly recommend it.
Yes, you don't want to wait. And I know right now rates are super low, so everybody wants to jump on and do things. But if you're not prepared, when you go into a multiple offer situation and your financing is not lined up perfectly, your offer is not going to get picked anyways. You're going to go against someone who's putting more money down, that has less contingencies, and a less risk of a client for a seller to pick. So in your best interest is to do this ahead of time and get your homework in order.
Absolutely.
So speaking about putting money down, there's so many commercials and advertisements about zero money down and down payment assistance, and what is the cost of doing that? I know that there are those options, and you have to hit certain income levels first.
Absolutely.
And then outside of that, it may not be a best fit for you.
You're right.
So tell me some things that you're seeing in the down payment assistance world.
So down payment assistance has really evolved over the years. It used to be, honestly, a really horrible option for most people, and we've seen it get better and better over the years. Right now, with the market, at the end of the day, with using down payment assistance, you might hear it referred to as DPA. Okay. So it's a tool that can be used, but you need to be strategic about it. Okay. So we've seen the rates for down payment assistance be really high, and a lot of times, unfortunately, it gets marketed as free money. Yes. And it's not free money. Right. So if you have the funds in your account, you're better off using those. You're better off using those. It's going to cost you less money. You're probably going to get a lower interest rate. Yep. So that is a reason not to use it. Okay. At the same time, as rates fluctuate and our markets go up and down, if you're looking at a loan that would potentially qualify for down payment assistance, but they're going to get a higher interest rate in the regular loan market, you can be strategic. Okay. I had a family not too long ago. They were going to be closer to 5%. It was a specialty product. And they're going to be able to get a 3%
Okay.
by using down payment assistance.
Interesting. So there's definitely different options.
Absolutely.
And not every option works for everybody.
Correct.
But there's usually a program somewhere, and you have access to all those different options.
We do. Every single one that's out there, we have access to it. Not everyone is going to qualify for down payment assistance.
Right.
But the ones that do, we have options.
Okay. So, and then when I'm looking at working with a buyer and we're looking at closing costs, there's also the different types of loans.
Mm-hmm.
You've got your government-backed loans, you've got your more private entity type loans,
Mm-hmm.
and that's looking at, if you're VA, if you're a veteran, the VA program is one of my favorite programs.
Absolutely.
I'm a veteran myself. I know you work with a lot of veterans.
Mm-hmm.
Zero down, that's the one true, along with USDA, those are
Correct.
like the true zero down programs that we have available. And then you go into FHA, which a lot of first time home buyers will usually end up using because it's got a lesser amount needed to put money down. But there's a trade off.
There is. Typically, your interest rates with FHA is going to be a little higher.
Mm-hmm.
FHA, in my opinion, gets a bad rap
It does.
a lot of times.
It does.
It's honestly, it's a really good vehicle for a loan. You just got to go with what makes the most sense for the family.
Right.
And if the family's debt to income ratio is a little too high to go conventional, FHA is a great option.
Yeah. So conventional has mortgage insurance, which we've heard about, or PMI.
Mm-hmm.
And that is something you pay additional every month up until you have 20% of equity in your house.
That's correct.
FHA has it and it never goes away.
For the most part, that is correct, yes.
Okay. See, the lender, he's not going to use never. Not going to use never. But I like it. But that's kind of what I explained. And now you can always refinance into a conventional later.
Absolutely.
And then have the mortgage insurance or PMI fall off. With mortgage insurance, they can refinance it if they want to get it off. Or if they put 20% down on a conventional loan, they can they don't have to worry about it. But if they want to start with maybe 10% down or 5% down, they can slowly work towards it.
They can. And what a lot of people don't realize is they have options.
Okay.
So you're not always stuck with the monthly aspect of mortgage insurance.
Okay.
You can do what's called a split premium, where you kind of have the best of both worlds, a little bit of monthly, a little bit of upfront.
Okay.
And then you have the full one, which is called the single premium. You can pay it as a lump sum at closing. It's a one-time cost.
Okay.
So in a lot of cases, it can make a lot of sense. I talked to someone the other day to where every 5% down was about $20,000.
Okay.
And I said, why don't you put 15% down? You can pay about a couple $100 to $1,000 to get rid of the mortgage insurance, and you'll save about 18 grand.
Wow. And then their payment goes down on top of that.
Absolutely.
Okay, so those are some really great options. That's just kind of a quick go through the different types of loans, because that's the conversations you start having with the clients once we get to that point.
Always so many different moving parts.
So my other favorite thing is paying points.
Yes.
So many people can get almost any interest rate you want.
You can.
But you have to pay for it sometimes.
And you got to make sure it makes sense.
Yes. And so sometimes you might hear someone say, no, go with my lender, or I can get you this and I can do that. And the fine print's not really showing you, or it's in there and you don't understand what it is.
Or the lender just doesn't show it to you in the first place.
And that's technically not doing the best job you can do for your client.
No, it's not. It's not. And unfortunately, they get away with it because you're not under contract. They're not locking the rate. So I see it all the time to where I look at a rate and I go, that's too good to be true.
Right.
Where's the discount cost? Where's the points? It's the same thing.
Yep.
And I'll tell them, go back to the lender. Tell them to lock it in.
Oh.
Because when they lock it, now they got to disclose it. And sure enough, here's this big cost to it. And sometimes that cost makes perfect sense.
Right.
But it's being transparent,
right?
And buying an interest rate down a couple $100, a couple thousand, you're going to recoup that cost and you're going to get a lower interest rate,
right?
At some point, you have to draw a line in the sand and say, don't go past this. You're never going to recoup the cost for this.
And it's really hard to determine what that line is because everybody's got different scenarios.
Absolutely.
A lot of times I think people really want to stay in their houses longer than they actually do. And they may buy down their rate and then end up leaving in 3 years.
Absolutely.
And they spent all that money and it didn't make sense. So sometimes it's beneficial to take a little bit higher rate to lock in the loan and get in. But it's not super high. We're talking maybe like 0.25 or 0.5. Maybe. Is it a full point that people will come down? That's really expensive.
It can.
Right. And when we say points, it's percentage.
Correct.
It's kind of, that way used to confusing. What's a point? 1 point is 1%.
Correct.
And so that's how they kind of talk about what points are. So 3/4 of a point or, a quarter of a point, that's what that language is.
Yeah, and we've seen that really evolve over the years. We've seen it to where someone could pay a full point, so 1% of your loan amount, and you might get a 0.5% lower in interest rate.
Okay.
Other times we've seen you could pay a point, you might be able to get a whole 0.5 point to a full point lower.
So that's why they don't actually call it a percentage rate, because it can change for what the value is. So it's like buying a piece of stock. The value of that stock could be different today versus what the value of the stock is later. So
Absolutely.
That kind of helps you understand, because that was the biggest confusion for me when I was buying my homes. I didn't understand, and we would buy points and not realize what we were doing.
Exactly.
So that's something to consider. So just understand you have options to change your interest rate. Even if your credit says this, if you've got the cash, then you could change it. But is it a best fit for you at that point?
Exactly. You got to have the conversation. You've got to see what's the long-term goal.
Right.
Is this a 3-year house we're turning into an investment or selling it and getting out?
Yep.
Or is this our forever home?
Right.
And that's really going to decide which route we go.
Yes. And those are questions that a true professional lender and realtor team are going to find out. They shouldn't be in it for just the buck, just for the sale, just for the closing.
Exactly.
Because we have the long-term relationship. We want to have repeat customers in business. And if we didn't treat you right the first time, you're not coming back. So we want to make sure everything makes sense for you. New thing coming into the market right now. A lot of people want to buy a house that already own a house. They're homeowners right now, but they're ready to move up, move down, move laterally, relocate. But they're so afraid to buy before they sell.
Yep.
Because there's nothing out there right now. The inventory is flying off the market. And if you have your house ready to sell, it sells in 3 days, which we're seeing a lot of.
Oh, yeah.
And you have nowhere to go in 30, you're scared. That's a big problem people are having. So the creativity and financing is coming back around. So I know you're a big proponent of one type of financing. The one word that's going to get thrown around the most is a bridge loan. Explain what a bridge loan is in just general theme.
So in layman's terms, it's you're basically getting a loan for the equity
of
on
your current
existing house before you've sold it.
And equity is the money I actually own. It's not what I owe back to the bank.
Correct. So you take that money and you're allowed to go use it on the next house for your down payment, your closing costs, while you still own your existing. So it takes that fear out of it.
Yes.
A bridge loan at the end of the day is a regular mortgage loan.
Okay.
Once you've closed on your new home, you're now going to go back and you're going to sell the old one, and all of the loans are going to get paid off.
Okay.
Your first lien as well as the bridge loan. So
what are the pros and cons of a bridge loan that you've noticed in the past?
So the pros are you're able to accomplish a goal of staying in the home. The cons on that are the cost and the time it takes you to close on a bridge loan.
Okay.
Another con, not a lot of lenders offer bridge loans.
That's true.
Not a lot.
What about interest rates on a bridge loan?
A little bit higher. You're taking on more risk, so they are a little bit higher.
Okay, so what kind of costs are higher, and why does it take longer to close?
So the cost...
Is it because you're running 2 originations and it's almost double of everything?
In a way, yes.
Okay.
In a way, yes. So it really goes with the risk associated with, we're going to give you this money, you're going to take on 2, and
we're fronting this.
Absolutely.
There's a lot at stake.
And we know it's going to be a short term.
Yes.
So it's not like, investors want to get their money back.
Right.
So there is more cost associated with it.
Okay. What about closing?
Closing is going to take you a good 30 to 40 days.
Okay. Which right now we're kind of seeing that in the market, so it's not an unnatural thing. At one point we were seeing 21-day, 30-day closings. And if you were in a multiple situation offer and you said, I need 45 days to close, and the other loan says, we only need 29 days to close, they're going to take that because there's less risk, because maybe they're not selling another house.
Yeah.
So inherently you already have something to overcome, because you're still kind of contingent on selling your house.
Exactly.
So there's a big contingency. Most sellers don't want to work with a buyer that has to be contingent on some other buyer buying their house. There's just too many steps. So what's another form of lending that we can do that maybe helps solve that problem?
So I actually like this one a little bit more than the bridge loan. So it's called a HELOC.
Okay.
A home equity line of credit.
Which we know of those.
Which we've heard of these.
Yes.
They're really cool products.
Yes.
And you can utilize them for so many different things.
Okay.
They don't change your first lien interest rate.
Okay.
So A HELOC is basically accomplishing the same goal.
Right.
It's a Texas home equity loan.
Okay.
You're utilizing the equity.
Okay.
So you can pull that out. Your costs are going to be typically anywhere from $400 to $800.
Okay.
That's it. We're not talking thousands. Just
but now I have a huge debt. I just pulled out a loan, didn't I?
They have options.
Okay.
Yeah, they've got variable option. They've got fixed options. All sorts of different options.
Okay.
I personally don't offer HELOCs. I never have in my career.
But you got a great partner.
I do. I have someone that I've known for over 15 years,
Yep.
and I trust him completely. He typically gets these turned around in 12 days.
So that doesn't
is the
add
minimum.
to your closing time.
Doesn't.
Because if we started originally in the beginning and the appraisal process, all that's very quick and simple. And it's a desktop appraisal from my understanding.
It is.
So it's just looking at computer comps really quick. They give you a value. And I believe you can take up to 80% of your equity.
Correct.
So if the more equity you have in your house, which this is really great for someone looking to downsize who've been in their home for 10, 15 years and they've been doing really great on their payments and they are just ready to move on.
Absolutely.
There's like such little risk.
And you can utilize it for other things.
Yes.
Not just going and buying another house.
Right.
So let's say that someone comes to me and they say, Luke, I want to pull cash out of my property, or I want to cash out. Mm-hmm. My first question is, what's your first lien interest rate?
Okay.
If it's low and you're not going to get a lower interest rate, or it's so low that it doesn't going to make sense to refinance down the road, I might say, leave that first lien interest rate intact. Like if someone's refinancing right now, the likelihood of us getting a lower interest rate down the road is pretty slim.
But this is just right now.
Right now.
This is something that transcends this time period.
Exactly.
Okay.
If somebody comes to me and they say, I've got a 3% first lien interest rate, I'm probably going to recommend go get a HELOC. Mm-hmm. Maybe they want to do some upgrades to their home, whatever the case might be. You can go get a HELOC and it's not going to change that first lien interest rate, which you're going to have for that 15, 20, 30-year term.
Right.
So this is something that's more short-term that you can be financially smart about.
Yes. So it's a great, great opportunity. We're actually working this right now with one of our clients, and it has been such a seamless, smooth process, and we aren't even worried about that part.
No.
Like that's done and moving. We're ready to get on to the next step. So it's a really great opportunity for someone who has a home that doesn't want to take the risk of listing it right away in case it sells too quickly, and it gets them cash in less than 2 weeks so they can make decisions in 2 weeks, and they're not contingent on selling their home anymore. It makes them a true, just non-contingent buyer, which other sellers love that. They don't want to have any risk because they're most likely moving on to somewhere else.
Absolutely.
And you don't want a bad domino effect.
You get this big domino effect, and they're done that.
Yes. So I love that. Other than that, I feel like those were most of my questions. I think the biggest thing that we really need to understand is there's so much to consider when buying a home. And whether you're going to put both partners or spouses, or we have people that aren't married that are maybe getting on the loan together, or we have family members that are buying houses together, friends buying homes together. Sometimes one person has really great credit but a ton of debt. And someone may have regular credit, but maybe no debt. And it might make sense to only do one. So there's so many things. I do have this question, relocations and jobs. So if someone's relocating to Texas and they're keeping the same job and they're starting work right away, is that going to affect their ability to buy a home usually?
No, not usually.
So and usually W-2. So salary employment. Now, if they're changing jobs or they're looking for a job,
that's where it can get a little interesting.
What are the things they need to consider when doing that?
So a couple of different things. If you're relocating and you're getting a job, either already have the job, and as a lender, we're looking for things that are contingent. Okay. So is this new job offer contingent on a personality test or anything that might put you outside the window of you no longer have this job?
Gotcha.
That's scary for a lender. So it might take a little longer to get that loan closed, maybe a couple of weeks. You might even need to start the job here before the lender can do it. Okay. There are some other options that in some cases work. Okay. You could potentially buy it as a second home before you move here. Oh. So a lot of people are like, it's too much to deal with. I'm relocating. I don't want to have to, it's a lot.
It is.
So you looking at it as a second home kind of takes a lot of it out of it. A lot of the fear and anxiety out of it. And the interest rates are they're not exact to purchase, but they're pretty close.
Okay. So that's a good option. I think the main moral of the story is if you're considering buying a home, don't go by yourself. Don't do anything by yourself, because we do this every single day. And you've been doing it for years. I've been doing it for years. And we see situation after, we just have stories and stories and stories. And that's why we want to sit down and have this conversation, because there's so much that we could talk about and go over. And we do this on a weekly basis.
We do.
Okay, what's going on here? What do we do here? And we're always pulling in more minds. We're always brainstorming, coming up with a team effort to solve a challenge. And if you do this by yourself, you don't have that team. So, and then the other part is, don't wait until it's too late.
Yes.
Even if you're thinking about buying next year.
Yes.
I know there's a lot of people who thought they were going to buy in 2020.
Oh, yeah. Oh, yeah.
And then the whole world just decided to play Jumanji, and we're on level 12 right now. And so we have a lot of buyers who have been maybe sitting on their haunches, and they've been waiting for the right time to strike. And sometimes the motivation for them to strike maybe might not be the best thing for them. And they still need to have that conversation beforehand. A lot of people wait for the rates to lower.
Yep.
And the rates did lower, but is it still a good time to buy? It depends on their situation.
Absolutely.
So have a conversation, whether you work with us or you work with anyone else. Make sure you speak with somebody. Yeah. You should interview multiple sources.
Absolutely,
I think,
you should.
To get the best deal that you can get. And always see if anybody can match. I mean, how many times have you been able to match deals?
All the time.
What about new construction?
I match them.
Matching new construction.
I don't win all of them.
No, but
we don't win all of them. But
and does it really just ruin your day when you can't match one?
It does. It does. Yeah.
But you're not going to be mad for the rest of the week because you couldn't get that business.
Absolutely not.
You know that you maybe got them some more money in their pocket.
That has happened. And you can't win them all.
You can't.
And sometimes the builders give these just insane incentives that are too good to pass up. That's when my role shifts.
Yes.
I now become an advocate. I now become somebody that can help you look at what is their lender giving you, and are they leaving anything out? Are there any red flags? As you said, we look at these things on a daily basis. Yes. So I'm able to become an advocate for the homeowners and say, go back and ask them about this, or this isn't right, or hey, did you mean to waive your escrows? Because that's going to add an extra $7,000 to $10,000 to your bottom line that you're not currently seeing. So we want to do whatever we can to help everyone, and no matter what level that is.
Well, we're thinking long game, because eventually that person's going to sell that house and go buy another house, and they don't always buy new construction. They might go a different route. So we are always working with our clients over the long term, because life happens, things change.
They do.
And you just never know. So if you hear somebody talking about real estate and they're thinking about buying, or they're questioning the market, just have them reach out to a professional and see. There's usually no obligation.
No.
It doesn't cost anything to get your pre-approval done.
Nothing.
You don't get paid till you get closed.
Exactly.
You're just like myself. No, we don't get paid till we get closed. So we're going to do everything in our power that's still in the interest of our client to make sure their goals are met. So any final last words?
Get started early.
Get
started with
That's our theme of the day.
Local lender.
Local lender.
That makes a huge difference.
I will tell you, as a realtor, if I'm working with a buyer who already has a lender, and maybe the lender is from a big box company that has advertisements on Super Bowl, and those lenders, the challenge I have as a realtor is I can't do things nearly as quickly as I want to, because they have office hours. Luke, do you have office hours?
24/7.
That's kind of our office. And I know I can trust that if I call you, you will get back to me if you don't answer for the first time. And usually there's a good reason why you don't answer. Now, we all have families, and we like to spend time with our families. But at the same time, we also have agreements with our families that we want to put our clients first. And when you have a big box lender, you don't always get that white glove service. And sometimes you're not even getting the best rate.
And sometimes you think you're good to go, and it turns out you're not.
They didn't check something. I've lost deals where the big box lender took into account a bonus and added it as their salary every month. So they weren't even close to being approved, because that was $2,000 they were adding every month. That wasn't really their actual money. $2,000 in the lending world a month in income
is huge.
Huge difference.
Huge.
And we lost, a whole deal fell apart because of it. So luckily we had multiple offers and went just to the next offer. But I mean, there's a lot of things you can do.
Yep.
So, okay. I really appreciate your time.
Of course.
I think this has been super helpful, super value. If you have any questions or comments, or want to email us or reach out, I'm going to put all of our contact information so you guys can reach us. And if you want to see more questions answered, just reach out, email me, and we'll do another one of these. I think this is a good thing to kind of keep on the regular, because things change.
They do all the time. I mean,
we got an election coming up.
We do. We
have no clue what's going to happen.
No clue. No clue.
We're all here just trying to insulate ourselves to make sure.
We've seen it before.
We have seen it before. It happens every 4 years.
It does.
So awesome. Any other last words?
No.
I appreciate your time.
Get started early.
All right. Luke Hamlett with Supreme Lending, Savannah Dunn, Keller Williams, and Allen, and we will see you on the next one.